Yeah, morning trades. A very, very interesting trading session playing through. There's been a lot of focus on Jerome Powell. You go into various asset classes, you can see that defensive positioning playing through. We can see vols up a little bit. The VIX has pushed above 20%. But we continue to see that safe haven bid playing through in gold and the Swiss franc. They continue to be the places to be. At the same time, we're seeing that sell-off in the long end of the curve. And it's a question of when 10-year treasuries can move above 5%. But of course, you go into you look at S&P futures out throughout the trading session. There wasn't really much going on. Pretty scatty price action in S&P futures, sort of just oscillating around VWAP going into Powell's testimony at the Economic Club. And ultimately, I think that has pushed risk around, and we've seen sort of volatility after that situation. But I mean, Powell, all intents and purposes, continue to bang this drum that for now less is more, and we've got this wait and see mantra, which a lot of the Fed are sort of adopting. He did suggest that there was more meaningful tightening still in the pipeline yet to come. Obviously, the tightening of financial conditions still manifesting into economics. He backed up this idea that a lot of people are looking at term premiums and, as I say, letting the market do a lot of the tightening for them. Now, I think importantly, there was absolutely no pushback around the pricing we've been seeing around November. Obviously, the market had seen this as a bit of a non-event in terms of raising rates, and he didn't push back. And I think that's, again, a green light for sort of rates traders and stir traders to look at what we've been seeing. He also, on a sort of dovish mantra, backed up what we saw from Christopher Waller in the previous session, where Waller talked about this idea that core PCE on a 3-month annualized basis was now around sort of the Fed's target of 2%. And that's what we heard from Powell as well, the idea that core inflation, if we're looking on a 3 or 6 month basis, annualized, is running below 3%. And I think, again, that's something that the short-term traders have looked at very, very closely. On a more hawkish note, you can say that Powell talked about this persistently above trend growth that we've been seeing, tighter labour markets, which are no longer cooling. And we saw that again last night in the claims numbers, which dropped 12,000 to 198. It's the lowest level since around sort of January time. So a bit of in there for everyone, but ultimately, if you have a look at rates markets, we're pricing 6 basis points for December, 1 basis point for November. The 2-year Treasury, really interesting there. We saw that dropping throughout the trading session from around 524 into 520 around Powell's testimony. But we've dropped down, good buyers, into 515 at the moment. So the net change on the day in 2-year Treasuries is down 7 basis points. Look at the long end of the curve, though. You can see 10-year Treasuries trading up about 6 or 7 basis points now, trading around 499. Just a whisker away from that magical 5% level as well. But really, the story of the day here is that twist that we've been seeing, that big move in the yield curve steepening that's taken place between 2s and 10s. We're up 12 basis points in the day. We're at negative 17 basis points. So, it wouldn't surprise over the next week or two that we were to take that yield curve into positive territory again after being, very so deeply inverted. But curve steepeners, the trade du jour, and we've seen buying in the front end and good sellers in the back end. Real rates actually pretty much unchanged on the trading session. In FX markets, actually, you've seen the dollar looking to be shunned on the trading session. It's really the MEX which has underperformed there, but you can see the dollar index actually having no influence by what we're seeing on the long end. It's really more about what's happening in the front end twos and to an extent 5-year treasuries as well. We've seen people saying, well, why is euro trading higher when we are seeing that's that spread of 10-year treasuries pulling away from German bunds? We're at the highest levels for some time at 204 basis point premium for treasuries. But it's really about what's happening in the front end of the curve that's moving the dollar, I think, at the moment more than anything else. Commodity markets, you can see that crude has had another big gain there. We've got Brent crude trading above 93 bucks at the moment. And as crude has moved up, you've seen gold looking to rally as well. So again, just that, as we're using nat gas in Europe as a guide and also Brent price as a guide around sentiment, around geopolitics and the idea that potentially we could get supply disruptions, gold's had that really nice move up. It's had absolutely no interest about what's happening at the long end of the curve or the dollar. It's really been about what's happening in crude and looking to hedge any kind of that sort of geopolitical exposures. And you've seen gold moving up quite nicely on the back of that. In equity markets, we're obviously seeing equities heavy on the trading session. In the S&P, only 15% of stocks are higher on the trading session. You can see the sectors here. There's not really too much love going on. There's a bit of buying in services and energy names at the moment. Of course, Netflix is up, it's up to 16% or so. But generally speaking, there's been a rotation back into that safety situation with the VIX pushing above 20%. So again, an interesting trading session. Those long end bonds selling off. We're seeing good risk, safety buying in gold and also in the Swiss franc as well. Kiwi Swiss under big pressure at the moment. And we're going to see a slightly weaker open expected for Asia today.